for that conversation, I have Isaah Mhlanga, Chief Economist at Alexander Forbes, and Citibank economist Gina Schoeman. Gina, can I start with you? Thanks. Your initial thoughts in terms of that overall budget. Earlier on in Power Lunch, I jokingly made the comment as to whether this budget was likely to be developmental or more markets focused. What was your take?
I think it's commendable, and well, I have to take it from a markets perspective because I do think there was a relief, given that we are seeing increased pressure to spend more in South Africa, particularly after a COVID crisis, and particularly after quite a long time of insufficient growth, and then of course also the social unrest. So with the elections just last week, wondering whether or not, the leading ANC party might be spending more in order to win back votes. I think it was a relief to look at this budget, and it's commendable to see Treasury pushing against unnecessary spending pressures. I do have some concerns about the outer years, but not so much about the way Treasury handles things, more about the way that government might handle reforms, etc. But let me just say it was commendable and a relief for me.
In the immediate term, though, any red flags for you?
I am a bit concerned that the wage bill was not reprioritized for the little bit, well, when I say a little bit, the 20 billion overrun of the wage bill. It was initially planned to be reprioritized, but of course they are using the revenue overrun that we saw from commodity prices this year in order to pay for that. It also concerns me that there was a bit in the budget stating that if the wage bill overruns again, they might have to look at the infrastructure fund in order to reprioritize some of that in order to spend on the public sector wage bill. So again, that consumption spending, clearly a red flag in terms of spending pressure going forward, but again, offset by some very comforting comments, I would say, with Treasury talking about the fact that we can't easily just go ahead and pour a whole lot of money into social protection. Of course, it's very important, but we need to think long and hard about how we're going to grow the economy in an inclusive way to create more jobs.
Yeah. Isaah, your opening thoughts?
What was interesting is fiscal consolidation was also visible from the food packs that we economists that go into the lockup receives. In the years gone by before the pandemic, we were used to a buffet of lamb chops, chicken, meatballs, fruit salad, and a variety of stuff. But this time around, that was replaced by a cheese sandwich, and orange yogurt, and chicken wrap. So it shows that there is some cuts across the board. Even though there are still some cuts, not everything that is unnecessary has been cut, which means there's still room to do a little bit more. So I'm quite happy with what I saw in the budget. And again, to take the Minister of Finance, Godongwana's, say the difference between him and the former Finance Minister, Tito Mboweni, is that he wears better shoes. Indeed, he had better revenue collection, 120 billion better than the budget. Former Finance Minister Tito Mboweni had 100 billion. So all those anecdotes they fit together in this framework, and I'm quite happy with what I saw.
Yeah, I want to go a little further and talk about what made you happy as well as what might have made you unhappy. But I was going to say perhaps the minister's the minister's tastes in terms of food might perhaps be different to the Prime Minister, and perhaps his choice of shoes as well. But was there anything that scared you in that budget that made you think maybe this is some subterfuge of some sort here that we should be watching going forward?
I think it's the risks that Gina has pointed out.
Okay.
For this current fiscal year, it's not really much of a debate. Growth at 5% is on consensus. Still don't have inflation to warrant, us to expect, aggressive rate hikes. That is good. But next year, we go back to a growth focus of about 2% over the medium term as well, which means the room to spend more is no longer going to be there, given that the tax revenue collections are unlikely to perform as they did in the current fiscal year. And you have a lot of fiscal pressures, the wage bill, potential for the extension of the 350 COVID grant. That is going to put pressure. But also in addition to that, politicians are still wanting a universal basic income grant, and that's going to be difficult facing a general election the year after. So those risks just, make me unsettled a bit. And in an environment where the global economy is starting to turn negative, or is starting to moderate quite significantly, so the lever that we have pulled this time around is going to be significantly reduced next year.
The usage of the windfall coming from the commodity boom, are you satisfied with that? Could the minister have done something else with that money?
From my side, he did what I had expected, to use part of the revenues to cover for the unplanned or unbudgeted for spending in the public sector wage agreement for 2021, roughly 20 billion, and then to cover the social relief of the distressed following the riots and the third wave that I had expected. But also, if you look in terms of the borrowing requirement, which has reduced slightly, which means there is room to actually reduce issuance and help to reduce the debt service cost going forward. So essentially, my expectations have been fully met. So I wasn't expecting anything fundamentally different to what he tabled today.
Yeah. Gina, you referred to the losses that the ANC suffered in the local government elections, and you were speaking to something that I had also raised earlier in Power Lunch about whether we might see an expansionary budget that tries to make sure that the ANC spends in order to try and see if it can salvage its positions come national elections in 2024. The focus on social spending, I was trying to find the page where the minister talks about what's going to be done over the next 3 years. Is that not a red flag in terms of perhaps politics trumping economics and good financial discipline?
Well, this is going to be where it becomes really interesting, because South Africa's still got a relatively high degree of institutional strength. And that means that, much like the South Africa Reserve Bank is independent, I'm not saying the National Treasury is independent of government, because, of course, government tells them, what they should or should not be doing, and they'll push back on that and say, well, we can or we cannot afford it. But for sure, the concern here is what happens with the type of spending that a lot of other emerging markets have done in the past ahead of elections. I must say that in South Africa, we actually haven't had what we call a fiscal impulse in a very obvious way before elections in the past. But then again, we've never had a ruling party that might be more as desperate as it is this time to win back some of those votes. I mean, I believe that National Treasury, and I think you see it throughout this medium-term budget statement, throughout the tone of it, I believe National Treasury, and coming from the finance minister, is going to do its best to push off any unnecessary spending, particularly if it's seen to be unaffordable. In other words, unaffordable meaning we're going to have to raise revenue in a permanent way, or we're going to have to raise more debt in a permanent way, because both those things increase the risk premium on South Africa. They're in reaction to inefficiencies. They just don't lead you into a better investment climate. So I like what I see from the tone. I don't believe we have a National Treasury or Finance Ministry that is going to easily bow down to a lot of political pressure. However, I do believe the political pressure is increasing. Yeah. And we have to be very careful here because, something like the basic income grant, yeah. I don't think any of us are arguing that people in South Africa shouldn't have more income, particularly given our incredibly high degree of unemployment and poverty. Yeah. But the trick here is, how do you fund it? And how do you ensure that while you do it, you're going to also accelerate growth, yeah. so that the social grant system doesn't basically just end up crowding out all other types of expenditure. That's the risk on the horizon. But I'm quite confident for now that our National Treasury and Finance Ministry are very alert to that. In fact, just to end off, yeah. There was a part of the medium-term budget statement that mentioned that they will only relook at social protection if the February 2022 budget improves. Now, that's going to be very interesting to use as a yardstick.
Absolutely. Two things that surprised us in the newsroom. One was on the number of South Africans who, one way or the other, depend on social grants. I think the percentage that we saw was 46%. I almost fell off my chair. Then the other one was no money for SOEs. I want your thoughts both on that one. I'll begin with you, Isaah.
Look, it's not much of a surprise to us in terms of the number of people that receive social grants. We have known this for quite some time. It's not really a surprise. As far as SOEs are concerned, yes, it's good that no new commitment has been made, but there isn't really, much that we should have expected compared to what was said or already in the budget last year. I think the most important thing is the growth story that is beginning to emerge. We saw quite a number of economic reforms that are due for implementation in 2022. Then that is going to provide us with a yardstick on which to measure the performance of Treasury vis-a-vis what they've now committed to. And I think that is going to be something that we're going to watch, that rating agencies are also going to watch.
Is your faith based on the strength of the national treasury like Gina, or you are placing your faith in Enoch Godongwana?
Look, it's not really much of faith, but to look at the objective realities of the country's fiscals. We understand that politicians have different trade-offs to what the staff of National Treasury has. The finance minister sitting in between the politicians and the staff of National Treasury needs to map the politicians' trade-offs into that of National Treasury staffs. And that means we have to have a sustainable fiscals over the long term, but also concede to some of the immediate, trade-offs which politicians want to make, which is to help the poor, which are their constituents. We can't avoid that. But ultimately, National Treasury is tasked with making sure that we have a fiscus that is sustainable, that continues to serve in terms of consolidated spending, 59% of spending that goes towards social spending. That is what we will expect to continue.
Yeah. Gina, do you want to add anything to that?
Well, I take that ratio that you mentioned, but the mere fact is we've had a whole lot of people as social grant beneficiaries for a very long time because of the problems, the fundamental problems in this economy. And now we've just added an additional 9.5 million individuals, which of course is supposed to be a temporary social grant. But of course, we're all thinking that this will be extended. But it's numbers like that they seem to floor us. But this is where I wonder when the shock factor is actually going to hit South Africa. I mean, along with the number of individuals receiving social grants, we also have a 35% unemployment rate. We've also had 14 years of load shedding, 11 ESCOM CEOs. I mean, these numbers are all quite staggering at the end of the day. But at some point, we need a shock factor to actually remind ourselves that we need to do something about this. We cannot continue along the same line, otherwise something's got to give. And in regards to that, it extends then into no money for SOEs. And I think what's quite sensible here is that if you look back at the February budget, government and National Treasury did put in place more stringent requirements when requesting bailouts, and the number of bailouts has started to decrease. So you can see that eventually, at least, it is noticeable that SOEs have, of course, been sucking out a lot of public finances, and Treasury is really drawing a very hard line in the sand in that regard, because I think the inefficiencies there are very blatant, and they don't want spending to go into what I think our former finance minister called a sieve.
Yeah, yeah. And he also talked about the mouth of the hippopotamus, I think, if I remember correctly the last time. The reforms that the minister reiterated, I think all of us know about those reforms. We've seen what the government has done on energy. We've seen the talk around trying to establish a national ports authority to try to improve logistics of exporting stuff out of the country. Spectrum, yesterday we had that good news coming through that ICASA was going to reconsider and extend Spectrum for another 7 months or 3 months, whichever comes first between the disaster and the sorting out of this issue, and then tourism and skills water reforms. Is there anything there that kicks the economy, that gives the kicker that's required to get a struggling economy up and running in your view, guys? Gina, I'll start with you.
Well, I like it when we are told more about reforms, but I prefer it when they come with timelines. So if I remember correctly, the first 3 in the list of accelerated reforms came with timelines, particularly Spectrum and particularly e-visas. And those are 2 that stand out for me. Now, they're not going to suddenly boost South Africa GDP growth back up to the miraculous, 3%, 3.5% we once used to enjoy. But just getting things done is a boost to confidence. I think we saw this earlier this year when we underpromised and over-delivered for once on embedded generation. When we finally get to doing a reform, confidence does increase. And it's this low-hanging fruit, which I think Spectrum's become, because, we really are at the 11th hour and we must just get it done. But together with e-visas, especially in a year where the world is reopening and we're getting tourists coming back to South Africa, we really want to kickstart that sector again, especially after the last 2 years. So I like that those two reforms come with deadlines and timelines so that we can also hold government accountable for what they've promised us.
Yeah. Isaah?
I think just to add to what Gina has just pointed out, Transnet Freight Rail will allow third-party access to its rail network by the end of 2022. Again, another reform that comes with a timeline that is so important to shift goods from road to rail, that is much more efficient, that can increase volume and capacity. So that is very, very positive. But another big economic and potentially even social risk after electricity, which is the water sector. There are plans to establish the National Water Resource Infrastructure Agency that is going to be responsible for bulk water resources. And the issuing of single-use water license is expected to be implemented by March 2022. Again, that comes with a date, which means there is a commitment to actually implement some of these things. So, which is positive, and it's likely to boost confidence once we start to see that being implemented.
Yeah. Let's go to the national, well, the sort of broader numbers. I wanted to start with the growth number that the minister put out there. I think it was 5.1%. Does that tally with you, Isaah, in terms of what we have seen of load shedding and also the softening of commodity prices? What are your thoughts on that front?
The immediate term growth outlook is less of a debate.
Right.
Almost consensus expectations are at 5%. Even with the load shedding that is currently taking place, maybe there are some downside risks, even with the July riots that we saw. If we look in terms of economic activity, that is a sensible and almost at consensus. So there isn't much debate. The debate is on the outer years of the forecasts, especially given that we are now approaching several risks, both on the domestic side, but also on the global side, where we're starting to see global central banks gearing up to reduce quantitative easing, but also if you look within the emerging market world, they've started to increase interest rates because of inflation that has now moved from temporary to potentially persistent. And that is a negative, global growth environment that we are going to play into next year. Commodity prices that have served us last year and this year in terms of better, tax revenue collections are also starting to show, some tapering off, which means we are not going to have as much a leeway to actually boost local economic growth than we had.
Yeah. Gina?
Yes, I mean, I couldn't agree more. We've got a number very similar, close to 5% for the current calendar year. But
Okay.
please, just a big warning there that this is the rebasing. This is the rebound, the base effect from last year, and this is also commodity prices. From next year on, you're going to start seeing a slowdown to 2%. And then unfortunately, in 3 years' time, we're below 2% on our forecast. So, I share the same concerns as Isaah. And I think going forward, maybe just one thing to point out on the interest rate cycle, yes, we're going to have to begin ours at some point. However, we are quite fortunate because our interest rate cycle of normalization is probably going to be less aggressive than what a lot of other emerging markets have seen thus far.
Yeah. I wonder to second guess the rating agencies. They've been watching this presentation, I suppose, with a great deal amount of interest. I think there are 2 of them that are due to pronounce on South Africa. We'll try and see if we can get any kind of reaction. Gina, your thoughts in terms of where this places us as far as the rating agencies are concerned?
Unchanged, I would say.
Okay.
I think the best we
Which is
can
good.
go for is to... Which is good, but we need to move out of negative outlook territory.
Yes.
And I think they're waiting for February next year for that.
Yeah. Isaah?
I'm in line with Gina, unchanged. I think they will still have to wait a bit to see the implementation of reforms before they can get some second thoughts on moving from negative to stable, and that will be in 2022.
Right. So when we look at the overall budget, I see a lot of people have been passing comments, and on MoneyWeb, for instance, I do look at them from time to time. I see they have given marks in terms of the minister's presentation. I wanted to compare notes here. Lumkile Mondi has been given 7 out of 10. So he says the minister gets 7 out of 10. Then we have got Adrian Saville. He is given the minister 7 out of 10. Kevin Lings, however, comes in at 6 out of 10. And Tabi Lioka is 9 out of 10. Gina, where are you?
Well, I'm going to ask a lot of those people why they put that. I can't, to be honest, I can't really comment because I was in the embargo lockup. So when the speech starts, that's when we start sending out all of our analysis. I will, however, watch the actual speech, even though I read it a little bit later. But from what I read, I was quite happy. So I'm happy to go with a 7.5% out of 10.
Yeah, sounds good. Isaah?
Look, a lot of what we have been saying over the past weeks came out, and a little bit more in the sense that there was a pushback against increased social spending without, allocated tax revenue, lines. So I'll give it an 8.
An 8. So overall, we have to say this minister has started well, and that what we saw today, in part, was a good continuation of what Tito Mboweni set up. Would I be accurate in that description, Isaah?
Absolutely.
Okay, Gina?
Yes, I believe so. We're going from shoes to hats, I believe.
Yeah. So